First, I want to thank our excellent partners, the University of Oxford, ClearPath, and the American Council for Capital Formation. So when we were thinking about this, putting together this conference, one way that we think about the world at the University of Chicago's Energy Policy Institute is through the lens of the global energy challenge. I like to think of the global energy challenge as being a stool that has three legs. The first stool is how do we ensure that people have access to the most, to inexpensive and reliable sources of energy that are critical for advancing living standards and societies depend on, and everything we in this room depends on, the lighting and the cooling. The second part of the challenge is how do we avoid having all kinds of local environmental problems, call them air pollution, and the health problems associated with that. And that's obviously important. Air pollution is probably the greatest threat to human health on the current threat to human health on the planet. And the third leg of the stool is that the same energy sources that power so many economies and cause air pollution also often involve the release of CO2, and that is increasing the odds of disruptive climate change. The recent IPCC report underscored some of those issues. And so what makes the challenge, I think, such an interesting academic exercise, but such an urgent policy exercise, is it's not hard to think of policies or interventions that can achieve one of those goals, or maybe sometimes two of those goals, but it's very difficult to think of policies that can get all three of those goals. And there's often very painful trade-offs, higher energy prices in exchange for a cleaner environment. But what we're here today to talk about is kind of one of those rare win-win-win opportunities, and that's energy innovation. And energy innovation, in principle, offers the potential of getting all three legs of that stool all at once. And so we're going to dive into that with really a star-studded cast. I personally am very excited to hear all the thoughts for the people who are going to be involved today. And before we get started with the first panel, I just wanted to say that we also view this as kind of an announcement that the University of Chicago and the Energy Policy Institute is interested in engaging much more deeply with the Washington and the policy community. And in particular, my own view, having worked a little bit in Washington and then having spent most of my life in academia, is that there's lots of terrific ideas that get kind of bottled up in academia. We are awesome at developing languages to keep people out, and they're very useful for communicating with each other and very useful for preventing communication with anyone else. And so we view this as kind of the beginning of an effort to try and untrain ourselves and engage more deeply with the policy world and bring creative ideas to Washington and the policy world. So with that, let me turn it over to Amy Harder, who's going to be moderating the first panel, which I will be a part of.
Well, thank you, Michael, for those.
I should say Amy Harder, who needs no introduction.
Yes, hello, everyone. It's great to be here and great to be working with the University of Chicago. So I'm going to introduce our panelists and have a discussion up here. And then toward the end, I'll be throwing it out to you in the audience for questions. So please be thinking about that. As Michael said, we want it to be as engaging and as much of a dialogue as possible. I certainly think that doesn't happen enough here in Washington. So of course, you all know Michael. To his right is Melanie Kenderdine, principal at the Energy Future Initiative and a former top official at the Energy Department under President Obama. Next to her is Steve Koonin, a professor at New York University, also a former official at the Obama administration, and before that, a chief scientist at BP. And at the end is Dan Nocera, a Harvard professor of energy and a leading inventor and researcher in renewable energy technologies. And so I know Michael has a few slides and framing comments to talk about this important topic.
Thank you. So what I while we're kind of going through some kind of 12-step program to become better at communicating, I thought what would be best but some charts and figures. And so here's a couple facts that I hope will help define the nature of the energy challenge. So the first is just to level set, where are we with respect to climate change? This is just one of the legs of the stool, but an important one. And the red line you could kind of think of as a business as usual scenario, which without any kind of concerted global action on CO2, we're on a path to maybe 4.5 degrees C increase in temperatures by the end of the century, and that would be the path of greenhouse gas emissions there on the red. The green line, which maybe requires some updating as the world seems to be more and more focused on 1.5 degrees C, would be the path that could, in principle, bring the world to 2 degrees C warming by the end of the century. And then the blue one is, so you could view that as half full or half empty, and it's broadly consistent with the Paris Agreement, although there's lots of extrapolation after the Paris Agreement runs out. But the key point is we're probably, I think the blue line might be somewhat optimistic at this point, given the changes in political winds since the Paris Agreement, but this is kind of, you should think of this as the range of outcomes. The next thing I just want to focus on is why are we on such a large emissions pathway? And the answer is pretty simple, and it comes back to the need and desire for inexpensive and reliable sources of energy, and that's just that as we currently construct energy markets, and this is in the case of power, it's even larger with respect to transportation, but energy markets are pushing people to rely on fossil fuels, and the reason is that they're incredibly inexpensive. And even the conventional coal plant there, that's a conventional coal plant in the US with lots of environmental controls. Without those environmental controls, it would be less expensive per kilowatt hour than even a natural gas plant. But one point that I'm sure we're going to keep coming back to as we think about innovation is that these prices that are in energy markets as we currently construct them do not send a strong price signal to innovators who might be interested in developing, like Dan, might be interested in developing new ideas that for low carbon or low pollution energy sources. And so here all I've done is I've added, what if you monetize the greenhouse gas costs and the conventional particulates pollution costs? How would the playing field change? And what you'd see is, coal, which before looked like a technology you might want to use, is way out of the money. It's a little bit hard to get a read on what nuclear costs. I'm sure that's going to come up throughout the course of the day, but that suddenly looks a lot better. And you can see that if we had strong price signals, there's the potential not just for changing today's energy supply, but for inducing all kinds of innovation in the energy sector. So now I just want to talk about where things stand with innovation. And this chart is actually a little bit dated at this point, but what it just makes clear is that in the last decade, there's been an unbelievable reduction in solar costs. That's the green line. And that innovation has also begun to emerge to some degree in batteries and winds and wind, but there's really been tremendous innovation. Now, these are still more expensive technologies when you account for intermittency, but that's a quite promising sign. However, having said that, at the same time, there has been maybe equally impressive, more impressive gains in the efficiency of extraction of fossil fuels. And so here's just the shale gas resources by country around the world that you could have thought of those as all economically infeasible 10 years ago. And I've just put in red North America, which is the one part of the world where we've really started to access them. But if you look around the world, you can see there's resources everywhere, or in many places, and in many places larger than in North America. And for the clean energy technologies, the low carbon energy technologies to enter the marketplace forcefully, they're going to, short of reconstructing energy markets to reflect the carbon costs, they're going to have to, the low carbon sources are not going to have to continue to improve, but they're going to have to continue to improve and beat the fossil fuels. And as you can see here, there's a great abundance. Of course, one thing that can help generate in getting low carbon energy sources into the system more successfully is through support of R&D at the stage at which there are spillovers. And I think, this is going back to 1975, and, a sober look at that, I think, would suggest that the time trend in spending probably is not consonant with the climate challenge that we have. And if we really mean it when we say that we want innovation in clean energy, it's probably going to require some resources. So I think with that as background, I think Melanie has some ideas that might follow naturally from that.
I'm going to give a high-level framing of the issues that I think we need to take into consideration and address as we work to decarbonize. And some of them are positive, some of them are problematic. This is a problematic one. This is the top 20 most populous countries in 2015 and the top in 2050. It doesn't mean that this will be the top 20 in 2050. I haven't looked at it. It's just comparing like to like. And what you see there, you look at Nigeria. Nigeria in 2050 becomes the third most populous country on the planet. It surpasses the United States in population. I didn't believe these numbers. I checked them many times. The last number I found in Nigeria was 404 million, not 398. It has a landmass 1/6 of the United States. I was just in Rwanda giving a speech in Kenya and went over to Rwanda. The median age in Rwanda is 15.8 years. And so significant population growth, all of the countries in Africa are like that. Then these are the countries that actually lose population. China loses a little population. India becomes the most populous country on the planet in 2050. And India has a significant amount of lignite coal. I would say that Modi has a universal access to electricity policy. By 2022, that means adding about 450 million people to the grid in India if he is successful, and it gains 400 million in population. That means in one country alone, we are adding 1 billion people to the electric grid. And so this is a challenge that we are going to have to meet with innovation. These are U.S. and global urbanization trends. You can see there in the U.S. On the left, it's on your left. The green, light green is rural, dark green is urban. Rural by 2050 actually loses a little population, and you can see the huge increase in urban population in the United States. That makes smart cities important. The same is happening in around the world. In 2008, for the first time ever in human history, more people lived in cities than lived in rural areas. And the light green down at the bottom there is rural. The orange is cities of 500,000 to 1 million. What's interesting to me is the red at the top. It's a significant slice of that pie, and that's cities over 10 million people by 2050. These are global energy investments in 2017. For the second year in a row, electricity exceeded it's $750 billion for electricity. Fossil fuels, $132 billion. This is global. Renewables generation, $298 billion. So it's over twice as much in renewable generation investment around the world than in the U.S. Than fossil fuels. Here you see oil, gas, and coal. I separated out oil and gas because for the second year in a row and the first time ever, electricity investments surpassed oil and gas investment in the world. And that's highly unusual in the history of investment. These are energy investments by select countries, and I'm only going to look at, for obvious reasons here, China and the US. China is orange, these are billions of dollars. US is green. What you can see over here, upstream oil and gas, US exceeds China pretty substantially. But you go here to renewables, China is at about $100 billion and the US is around $40 billion in renewables. You see the same thing in electricity networks. We're investing a little bit more relative to China in electricity, but they are still beating us, okay? What I would say on that is that they are building out their electricity infrastructure. So they're catching up with us relative to percentage electrification, but their electric grid is going to be much more modern than ours as well. So we need grid modernization. That's what that says to me. They are also outpacing us in efficiency. These are trends and boundary conditions that affect the pathways and pace of energy system transformation. The overarching trends in the world and the US, changes in our supply profile, a lot of gas, Michael already talked about that. Shift from resource to technology-based energy systems, digitalization, big data analytics, smart systems, electrification, electricity dependence, demographics, I already talked about that, and decarbonization of the electricity sector. Decarbonization of our electricity sector, I looked early this morning, between 2006 and 2016, we made significant progress in decarbonizing our energy sector. We in the US are number one when you in decarbonization, increased in Asia, increase in South America, a slight decrease in Europe, but a large decrease in the United States. 1 year last year, we decreased our carbon emissions by almost 1%, and Europe went up last year. 63% of that reduction in the electricity sector is from switching from coal to gas, and 37% from renewables. These are boundary conditions of energy systems. The energy industry is a multi-trillion-dollar per year, highly capitalized commodity business. This is from a paper that Secretary Moniz wrote in 2010. He is a physicist and uses the word with exquisite supply chains. I would say complex. He says exquisite, providing essential services at all levels of society. This leads to a system with considerable inertia, aversion to risk, extensive regulation, and politics. I'm going to skip over that because I'm going way too long. Okay, hold on. Two supply chain points. These are, this is pipeline gas you see coming up around the world. This is LNG gas volumes you see coming up around the world. And these are new volumes that will come online by 2020. What this says is that by 2020, LNG volumes will likely exceed pipeline volumes of gas for the first time ever. And so what you're seeing is the development of a truly global gas market. This is Panama Canal, which I went to a couple months ago, and only 23 of existing 420 LNG vessels could move through it. Now about 90% of them can move through the Panama Canal after the widening. It saves about 42% of the transport time. What I would say about both of these is a supply chain issue. The United States needs to be thinking about LNG volumes, where they're going, who our allies are, et cetera, et cetera. This is another supply chain issue. These are batteries. The purple is lithium-ion batteries. We have made a down select in the US to lithium-ion batteries. I looked at where lithium batteries are manufactured in the US, 21 states. Okay, so we have built an infrastructure around lithium-ion batteries, and this is where lithium is. Lithium is processed or mined in Chile, Argentina, Bolivia, China, and Australia. Right now, China is buying up Australian lithium mines, And I would just point out that OPEC had 15 countries when it was in its heyday, and right now we have lithium in 5 countries. And cobalt, a key ingredient of a battery, lithium-ion battery, is mined principally in the Democratic Republic of Congo. To me, this is another supply chain issue as well as an innovation issue, which I think Dan can address. We need earth-abundant materials for batteries if we are going to going down the path of electrification. And that's it.
Great. Well, thank you to Melanie and Michael for those great framing comments. Steve, I want to turn to you. And clearly, as we've seen from these presentations, there's some work to be done in this space. What would you say are the biggest challenges in building out more R&D and innovation, and how much is government and how much is more the private sector?
So let me try to make some remarks that fill in the frame that Michael and Melanie put. Set of disjointed but high-level points. Look, the first one was elucidated in an article I wrote with a young colleague in 2013 in Issues in Science and Technology. And that is, while innovation is important, transformation of the energy system is what we're after. And you can have the neatest idea, but unless it is deployed, it's obviously not going to have any impact. For that kind of transformation, the private sector engagement is essential. In this country, many other countries, it is the private sector who owns and operates the energy system. I was fortunate to spend 5 years inside of a big energy company when I was in BP, and I can tell you that it really changed my perspective on these things. And I would say it should be a requirement for every academic or government person, whether they're a technologist or a policy person, to spend half a year or a year in an energy company, whether it's a startup or a big company. It really is bracing. Beyond being economic, meaning allowing someone to make money, any technology has got to be better than the alternatives, because we're dealing with commodities, at least on the supply side, electrons, few molecules, doesn't matter where they're produced to the end user. A second point I'd make is that in a global world, invention, manufacturing, and deployment are 3 separate activities and can occur in 3 separate countries. We can strive to have invention in the US, and I think we're very good at that. Manufacturing is a maybe, and deployment is probably not here, since the greatest growth in demand and building out of infrastructure is going to be abroad. Solar panels, wind turbines, nuclear plants all offer excellent examples illustrating this disjuncture between the 3 different activities. And so selling clean energy on the basis of creating jobs, I was in the first Obama administration, that was part of the mantra. I think in retrospect, that's pretty specious. It's also likely that large-scale demos of energy technologies, small reactors, fusion, CCS, will happen outside the US because that's where the great demand growth is and regulations are looser in those venues. A third point I'd make is that supply innovation is different from demand innovation. Demand innovation is mostly about efficiency, many units to be manufactured, shorter lifetimes, although even auto innovations take 30 years from conception to full penetration. Decisions made by many individuals in demand, and cost isn't always a driver. That's pretty well suited to the traditional venture capital model. But every time I think about efficiency improvements, I also am reminded about Jevons and rebound. It's one of the few economic things I know, or think I know, and I wonder whether that's really going to result in demand reduction, particularly in developing countries. Supply innovation is the most difficult. Large capital, long lifetimes, decisions by a few high risk-averse entities. It's not a VC business, and so I'd look to the large companies. The large companies are capable of playing that role. In my mind, they're really like sharks. They only have one motivation, and that is to make money and do it legally and do it predictably. And they'll do it in any environment as long as it's a predictable regulatory and economic environment. And so you need some government action for supply innovation. Unfortunately, we're not very good at it. Certainly for basic research, There's a government role and support for doing that and a track record. I was the lead author on the first government's quadrennial technology review, which outlined what and why the government should be investing in terms of energy technologies. Lots to do there, but as you get to systems and demonstrations, there's not an agreed upon theory, if you like, about what the proper role of government is. We get closer to an industrial policy, which are dirty words in some people's minds. Solyndra is a great example. Of course, the failure was panned in the media, but it was technically great, and it was the market risk that did it in. Should the government have funded it? I don't know. Nuclear is another example, fission. At one level, it's very successful. Example of government development, catalysis of and promotion of a main energy source, 19% of U.S. electricity, but further deployment is killed in the U.S. by overregulation and market forces, namely cheap gas. So we need a theory here for what the right role of the government is in this transition from development out to full-scale demo. Finally, let me just close with my favorites. There was a question in a discussion last night of if you had 10 billion, what would you put it in? Here are my favorites. The digital overlay, first of all, to sense and control, cheap, pretty effective. Most of the opportunities are on the demand side. I don't need to go through them, but also on the supply side. I'm on the board of a company that develops a product that helps monitor and optimize more than 1,900 power plants worldwide. If you're running a power plant, even 1% in efficiency is a big deal. Of course, there are security and privacy issues as we go about this digital overlay. Vehicle lightweighting, greatest lever for improving the efficiency of light-duty vehicles. We know how to do it. The question is, can you do it at cost? Things biological. The carbon cycle, which is the main concern as CO2 builds up in the atmosphere, is largely about biology. I think there are great opportunities in modern biology to learn how to manipulate the carbon cycle. That's the way we should be doing carbon dioxide removal if we get to that. Small modular reactors, nuclear reactors, we should be doing it. Fission has got to be a big part of the future if you're going to drive emissions to zero. And then finally, my last sentence, although it's not energy, it is concerned with climate adaptation. It is what the world is going to do. If you want to just stabilize human influences, those emissions curves have got to go to zero by 2070 or so for 2 degrees, 2050 for 1.5 degrees. It's not going to happen, all right? It just isn't when you look at the trends that Michael and Melanie laid out. So the world is going to do that. There's been little systematic thinking about adaptation, to my mind. What's the framework? For mitigation, we got the wedges. I'm sure everybody's familiar with that. What's the analogy or analog for adaptation? What's the efficacy of various modalities, the costs, collateral effects, and so on? So I would put some money into that.
Great. Well, thank you, Steve, for that. And I think it's a good segue to Dan, our inventor on the panel. Can you kind of update us on some of the work that you're doing and maybe provide us with some positive comments for an otherwise not so positive story, and maybe compare what's happening here in the U.S. to other countries around the world?
Yeah, so when I think about innovation in energy, you almost have to be bipolar. It's this world, and then it's the world Melanie was telling you that's coming like a railroad down the track. And that's different innovation, and it's different investment models for transitioning. And in this world, what you need, you guys have paid trillions of dollars, and it's a paid-off infrastructure. So you're never going to leave it. So what you need to do is piggyback to it. So for instance, if you can give massive storage to our grid, then that opens up lots of opportunities. In the developing world and emerging economies, you have a bigger playing field. You're not as constrained because there's not that huge capitalization that you're tied to. So I'll give you 2 stories where we've moved things from the lab actually an experiment no bigger than that glass of water in 2010 to a megawatt, 1 megawatt storage system, and in 2 years, 100 megawatt storage system. And that's all in under 6 years, no valley of death. I'll explain why in a minute. And then in the developing world, I'll tell you the other part of the story. And it starts to get to investment. How do you move from the lab to deployment? And the problem with investment, and universities are certainly confused by this, and I hate to say it, all VCs are mostly confused by it. So how do you invest? If you have IT, you can put a few kids in a dorm room in Harvard, and they can do Microsoft or Facebook. So it's low CapEx, perfect investment opportunity. People can make a lot of money off of it. Then there's pharma. Pharma is not necessarily low CapEx, but these are the models universities use. It's not low CapEx, but you'll pay anything for it. Did you ever think what you're really paying for in pharma? You think health or whatever. No, hope. See, I have the little magic pill I just invented. It's going to cure everything. Since you all want to live forever, you'll pay anything for that. In energy, you don't have hope. You don't put the plug in the wall and say, please electricity come out of the wall. And you don't have low CapEx. So you need a different model. You can't, it's by the time you invest, you're going to get so diluted. And what we did is we went with an early partnership model. And we immediately said, what we need to do is invent something, get a demo. That's where government was incredibly important. We got one of the first ARPA-Es. That allowed us to establish a company, to then get an investor, Mr. Tata from India, to then build a demo that we then let companies use, Siemens, Lockheed Martin, GE, and they used our demo. It was a flow battery we invented. They used it for 6 months, and then we basically gave it to them. I can't go into the details, but I had 3 million shares, and I basically gave those up for free. And that gets down to the problem of this is greed. I'm a professor. I should only invent. I don't assume risk, so I shouldn't be making money since I'm not assuming the risk. And the problem with the United States is because of decreasing R&D, universities have decided as a money line, they're going to try to use invention to fund their university when they don't assume risk. And so we basically moved the company at a very early stage. What I should have done is just kept letting it increase in value, and then I could sell it for $10 a share, and I could pocket $18 million and say success story. That's what universities say, and then the technology dies and it's never deployed. And so what we did is we didn't do that. We basically, at a very, very reasonable terms, we gave it to Lockheed Martin. We had constraints about how much they would spend to go to market or it would get returned to us, and they carried through. So Lockheed Martin will be rolling out a 1 megawatt flow battery at the end of the year. You can read about it in the newspapers, and a 100 megawatt system in the next few years. That's huge because 100 megawatts puts energy on a power, in a power station, and it becomes a commodity because you know how much you store, you know your customer base you can sell. And so that's sort of one model for deployment I would call early partnership, and people who don't assume risk shouldn't be making the money, they should be partnering. And I think that is what would be really nice if economists and policymakers started thinking of these new investment models for high CapEx with no hope in the technology. In the poor parts of the world, since I moved to Harvard, one reason I moved to Harvard is to work with a friend of Michael's, Rahini Pandey, and Michael, because they're generating revenue in a condition. So now how do I get investment in the developing world? Nobody wants to give money for that because they don't have money, so you can't make it. So what we're doing there is they have made a CEMS, continuous emission monitoring system, that can set up an emission trading scheme, that can generate revenue. I invented something, I give it to the Institute of Chemical Technology, they get money from the ETS, they end up building the pilot, which you then deploy. So all of these are strategies to get deployment, and it all gets down to investment, and I think it has to be a different model. What we're doing in India, we can split water to hydrogen and oxygen, and then we're using synthetic biology. We made little bacteria, and they only eat hydrogen, and the biomass grows at 10 times the efficiency of natural photosynthesis. So if you look in the web, you'll see a lot of this. We beat out natural photosynthesis by a factor of 10. That means what Steve is saying, you can store a lot of carbon when you're doing photosynthesis at 10%, not 1%. So that's all getting piloted up, but with using policy, we're generating the revenue to bypass investment dollars from the private sector. Again, you have to build a demo and then let early partners, the big companies, use it, get the data, and let them decide if they're going to move it forward.
Great. Thank you, Dan, for those comments. I want to kind of go to the 30,000-foot level. I have two very quick questions for you out in the audience. Building on what Steve said about working in an energy company for some time. Raise your hand if you do or have worked for some type of energy company. Great, and yes, the panelists can take part as well. Raise your hand if you do or have worked for the government, any government. Great, great. So we have a good diverse mix of folks here. So a question for the panel. On a scale of 1 to 10, 10 being perfect, 1 being terrible, how well do you think the Trump administration is doing on innovation and energy R&D?
I think we talked about this at dinner last night. I think it's kind of a open secret, but I think the Trump administration has been doing quite well on energy R&D. So I'd 8.
Right, yeah. Melanie?
As a former Obama administration official or an Obama administration official, I would answer with what we did in Paris. We rolled out Mission Innovation, which was a commitment of 22 countries to double their clean energy R&D spending in 5 years. And also the Breakthrough Energy Coalition to invest patient capital in clean energy R&D. To the Mission Innovation point, the other countries are proceeding with their commitments. There's a secretariat set up for Mission Innovation in London. And so they are moving forward, but we are not. We have the budget request, I think in FY18 was lower for science and energy at DOE, which is 75% of the mission innovation funding in the government, and 32% lower the next year. So although the administration does say it is committed to mission innovation, its budget would say otherwise. Congress has gone ahead and put money into those programs and kind of ignored the budget request, thankfully. But I would say that if you look at the mission innovation commitments, if China meets their commitment and doubles their R&D spending in 5 years, and we stay level, and I'm trying to remember this, I think that they'll be outspending us by almost twice as much. And so when I look at what we're doing in the government and look at the investment numbers of the Chinese, I would be worried about our ability to compete for global markets for clean energy. One other thing I would say on that, we all know 196 countries signed on to Paris. We are dropping out, and 2 other countries, Nicaragua and Syria, never signed on. So it's the US, Nicaragua, and Syria. The rest of the world is moving forward on clean energy. And to me, I look at that as a huge global market opportunity that we might miss out on if we don't pay attention.
So I'm guessing that's lower than an 8 then.
I'm not giving a number, okay? But
I won't
Steve,
give you a number either, but I'll kind of split the difference between Michael and Melanie. And I would say not the administration, but the government as a whole.
Yeah, that's what I meant.
Yes,
sorry.
right. Is
See,
actually
that's
doing
different.
pretty well.
That's what I meant, yeah.
Congress
Yes.
did the right thing, and I think you got to separate the political noise at the top from what actually goes on. And when you look at the DOE programs, RPE and the base programs, they're actually pretty good and not much different in terms of actual R&D than what was going on in the previous 2 administrations.
What about you, Dan? Are you going to throw me a number, or is
I'll
Michael
give
the
you-
only one
I'll
following
give you
directions?
2, because I think there are 9 in what they, this is administration now, not government. I agree with both Michael and Steve on that. But for the administration, 9 for what they care about and 2 for what they don't care about.
Can you elaborate a little bit on
So,
that?
you know, fossil fuel nuclear, they're doing 9. And for things Melanie said, they're 2. So it's that simple. But then you have Congress overriding everything, thank God.
Well, I'm going to throw
That's
it
a
out.
common thought these days. Thank you.
I'm going to throw it out to you in the audience in just a couple of minutes, so please be thinking about questions. You know, one of the common themes that we've discussed up here is the role of the government and policy. I mean, what kind of policies do you think are needed to really drive innovation? And is it really, you know, of course, we often come back to some sort of price on carbon. Is that really the only answer, or are there other ways to achieve similar goals? Melanie?
if I could, Steve and I are here, you sort of agreed with me in the last point, but I want to disagree with you strongly about the role of the government and in R&D. And when I was at MIT, we did the Future of Natural Gas study. The CTO, the first day, the former CTO of BP came in, sat down my first day meeting with him. He was a co-director of the study, and looked at me and said, "So what's with all this shale gas hooey?" Okay, and that was in 2008. And there's some fairly revisionist history about the development of shale gas, where the industry did it all. But when you look at when the Department of Energy was started, one of the first things it did was characterize shale basins. It also, when I was there for 8 years in the Clinton administration as well, we invested in drilling technologies. And there was a Section 29 tax credit for unconventional gas. And there was a Gas Research Institute, a lightly administered surcharge, FERC-administered surcharge on gas volumes and pipelines. And the Gas Research Institute, George Mitchell was on the board of the Gas Research Institute. He came in, said, I got shales producing, but they stopped. I can't get sustained production. GRI, you come in and do field experiments. GRI, again, FERC-administered surcharge on gas volume, spending $200 million a year on gas R&D. And so they did field experiments. There was uptake from the tax credit and the characterization of the basins and the drilling technologies that DOE worked on, and the structure of the industry. I would say it was BP who said it was hooey. Okay, the super majors had left the U.S., gone offshore and overseas. The independents were here producing. The structure of the industry enabled us to do uptake, and we had huge gas demand in this country and an infrastructure to deliver it. So government played a key role in that, and there are many other examples I can give of that too. So I think it's more important.
You can give examples where it worked. You can also give many examples where it's crashed.
Yeah, but that's because it does basic research.
So the question is, what made it work for shale gas and other things, and not for
policies,
things?
investments, and industry working together. Kind of what Dan was talking about.
I think
It
Michael,
was a
did you
good
have-
model.
I think Michael has a comment.
Yeah, I just wanted to step back. the other three
Break them up a
panelists
little
know a
bit.
lot more about the details of how these programs work. But I think one important, just trying to hit the title of the panel, I guess I have two ideas that I think are really important to get across. The first is, of course, there needs to be a price on carbon. If you want to unleash the private sector, which all three of these folks know the power of the private sector in the energy space better than I do, they need a profit motive, and that has to come from a price on carbon. And the case for price on carbon is very clear. It runs right through the damages that are projected to come from climate change. So I think that's easy. It'll unlock all kinds of innovation. The second part, which is a little subtle and a little different than the normal case for R&D subsidies for basic research. Normally, we want to subsidize basic research because if I subsidize Melanie's company, particularly at the early stages or at the demonstration stage, some idea that might come out of that will certainly benefit Melanie's company, but Steve might get a hold of that and he might do something that'll make Steve's company better, and we won't have enough innovation unless I subsidize Melanie, because she doesn't really care about Steve's company. And then sometimes that spills over to other countries, and we just kind of look at our shoes and think, well, I guess China got better from that, and that's, we don't care about that so much. But it's very, very different with respect to clean energy. The spilling over outside of our borders of the new ideas that come from basic R&D, that is a benefit for the United States. And that's because every time they reduce a ton of emissions in China or Russia or wherever it is, we benefit. That reduces climate change. So it is a different and stronger case for, I think, clean energy R&D than there is for normal subsidization of basic research. And I think that if I could leave you with one thing, I think that I just want to leave that point. It's a slightly different setting.
Great. I do want to throw it out to the audience. There are some microphones. Lindsay and Sam from Epic have microphones, so please raise your hand high and state your name and who you're with. And as a polite reminder, make sure to keep your question to a question and not a statement. There is a break after this where I'm sure we'll be happy to chat a little bit more. Right there, yeah.
If I could, I think IEA and EIA do very good work at what they do. Okay, but they are relying on modeling and et cetera, et cetera. I think that a different level of analysis needs to be done for what you're talking about, and to refine what some of those forecasts say. And again, the EIA doesn't analyze policies beyond some assumptions about policies, and they're not looking at the history of what policies have done. And I would give you one example. We outlawed the use of natural gas in power generation in 1978. 3 Mile Island happened in 1979. That gave us the coal fleet that we have today. I mean, that's what happened, and the oil embargo. So we stopped generating with oil as well. It's another level of analysis that needs to occur beyond just looking at their forecast numbers.
Steve?
Look, there are, in any given venue, there's market risk, there's technology risk, there's policy risk. And, people recognize that. If you go back to the Federalist Papers, I think you had Madison writing in number 72, any man who would base his business on the actions of the federal government is a fool, or something like that, all right? So policies are labile, and you just take that risk. That's part of doing business.
Great. Do we have any more questions? Don't be shy. I think we have one in the back. Sam?
Michael, your last slide showed the plunge in R&D as a share of GDP over the last 40 years, energy R&D for all those key countries. And I guess the question that I have is, if you did that, if you translated that into dollar terms, in real dollars, it's possible that it wouldn't look quite as bad. Countries are spending some money, and so how do we know what's the right amount, basically? If you're sitting there in DOE and you're trying to structure ARPA-E and look at the budget, and 300 million seems kind of small, and but what's really the right amount? And do we, as economists, have any good insight, or is that kind of an unexplored path of really what is the return on investment of R&D dollars?
Yeah, so it's a terrible problem to try and figure out what the rate of return is on R&D. And it's the little example I was giving is that, maybe if we give Melanie some money for basic research,
Policy analysis.
her company will do better, but then Steve's company will do better.
I'll do the research.
As well.
And Dan will invent something
Dan will do it.
incredibly
Yeah,
good.
they don't invent something. It's terribly hard to quantify all that. Now, having said that, there's a couple people in the room here who are doing really terrific work on actually trying to quantify that. Danielle Lee is here, and I think Gabe Chan is here too. Both of whom are doing really terrific work, and I would say it's kind of a frontier to try and understand that in a very quantitative way. But I'll just return to the point I was making. I think in the case of clean energy, there's the normal rate of return, and these guys are experts at trying to calculate that, but there's this kicker, which is that if the technology spills outside the U.S., we'll be getting carbon reductions, and that will provide benefits for us. And I think that's really important to keep in mind. And that wasn't true when we were thinking about R&D in the 70s in energy. So it's all to say, I think the case for high levels of energy R&D is very strong.
Well, I see a question right there. And
Hi, Bill Hederman from University of Pennsylvania and a former colleague of Melanie's. One topic that hasn't come up here in R&D and technology are prizes. And it seems to me that is a much more cost-effective way of accelerating what happens, and DARPA is certainly the example there. And I'd be interested in any opinions on that.
great. Does anybody want to tackle that one?
I just haven't seen any evidence that prizes actually work.
And when you say prizes, basically just to make sure everybody's on the same page.
So I'll give you some evidence. I was actually involved in formulating the first government prize, which was the DARPA Autonomous Land Race back in 2002 or something like that, or 3. And I would argue that one and a number of others really had an impact. You spurred innovation in vehicle autonomy, and we see it now flowering throughout the development community, if not early deployment. So, but I don't know, you got to give some thought as to what a sensible energy prize would be, given the problems associated with scale. Maybe it's things at the molecular level, if Dan can split water with sunlight, you give a prize for doing that at high efficiency or something like that. And
Pretty good at making methane.
Yep.
You get a prize for bio solution to converting
Right.
hydrocarbons.
Bill, you raise the issue of prizes is really a question about diffusion, okay? And how do you get uptake in the marketplace of some of these things? And offering a prize and what your description is, a diffusion issue. I think that
No, it's an invention issue.
It's invention, but if you have invention without diffusion, it doesn't matter. That was one of the early points.
Right.
And so I would love to see more work on what actually results in diffusion, and we need rapid diffusion right now because of climate change. And when I set up a shale gas R&D company in 2002. Okay, no one was thinking about it, and I've spent a lot of time thinking about it and working on it. What I didn't appreciate is the structure of the U.S. industry. That's what the diffusion was all about, and it did the uptake. And I didn't appreciate it then. I would love to see more work on that. Same thing with solar panels. Okay, Germany and China is what gave us diffusion of solar panels. So it's a broader analysis, and I think we need some work on it, actually.
So maybe you do a prize for the invention, but you also have to give it to a corporation or a major player.
Right.
That's the prize.
The prize has got to include the economics also, otherwise the
Hopefully
diffusion-
the big company will do that. But that's what I'm saying.
They'll know. Yeah.
We need new policies to start engaging invention with the people who can carry the
Dan,
load.
I have a question. You have I'm given kind of like standard economics things with maybe a little twist about the clean energy part, but you have a quite radical idea on how to spur innovation. So that's great that you handed over your 3 million shares. Not that many scientists are willing to consider me a friend. I think at least think we're friendly. So I don't have great insight into the minds of scientists, but would that thwart innovation inside universities?
No, this is how I view it. So
other people going to hand over their shares?
Yeah, when I moved to Harvard, one thing I did is I said I could control my IP or I won't go there. And that took a while, but they finally said fine. So that was one of the reasons I moved. And it was actually easy to sell to the university because I explained to our president at that time, and I know this is being taped, so I'm sorry, Drew, she hates when I say this, but how do they treat their undergrads? They treat them as future assets. So there you are, all the undergrads. I'm not sure which one of you will be a billionaire, but I think one of you will be, so I'm going to treat you all spectacularly well. And then someday you become rich, and that person gives me a lot of money back. And I explained to her the way she should start looking at IP for energy, because it's so high capex, is a future asset. Because if I give something to Mr. Tata or Ambani in India, there's no way if they become rich off of it, Harvard will not be collecting that money someday in a gift or some form. And so once I convinced the university to look at IP for energy as a future asset, that was very easy to do, what you're saying, Michael. And a lot of, what's happened is...
But that's you, will your friends do that?
No, it's the universities, because they're forcing faculty to basically think about their research as an income stream to run their universities.
I think we had
That's the problem.
I think we had a question at this front table. Yeah?
Thank you very much. Amitai Benan with SAFE. So I think one of the core tenets of the conversation around clean energy innovation and the government role is this assumption that the private sector is withdrawing from more fundamental research, and it's about managing that interface between the government and the private sector. Now, I see some signs that that is changing, maybe less so in energy, but if you look at the emergence of some of the big tech companies and powered in part by monopoly or near monopoly profits in one area, they certainly show some appetite in plowing serious R&D dollars into decadal or multi-decadal projects like driverless cars, quantum information theory. And one could also argue that the emergence of venture and growth of venture capital also extends out the innovation cycle. So the question is, I think, one, do you think this is the case? And if so, does it have implications for how the government should interact with the private sector? Should we be thinking about how to shape these very powerful, emerging sources of extending the innovation cycle?
So, my first thought as you were going through this is the New Bell Labs, right? And you see Microsoft, Google, some of the others they've got a lot of cash, putting it into some really far out stuff. I think that's great. Some of it will pan out. But as I think all of us have emphasized energy, at least on the supply side, is different. High capital cost, large scale, long time scales, and so on. These entities can afford that. Many of them shun the government money. They don't want to get involved at all with government grants. And I think that's fine. They'll undoubtedly do good things with it.
I think we have time for one more question from the audience. Right there.
Hello, I'm Jane Leggett from the Congressional Research Service, and I was wondering whether all of you agree with the statement I think Dr. Greenstone made, that a price on carbon emissions is essential to incentivizing RDD&D. And if you don't, could you explain why? And if you do, what should be the timing of that and the rate of increase? Thank you.
Great. I think that's a good concluding comment. I guess we can come back to Michael, but Melanie, do you want to start?
I totally agree with Michael's view that
That might be the first time.
That's not true, okay? We
Or is that other
work
time?
together too. So we've all worked together. I think that is the cleanest, most efficient way to sort all of these things out in the energy space. And one thing I would say on that is Congress expanded the 45Q tax credit last year, and 45Q basically provides tax incentives for carbon capture, utilization, and storage. And so we have incentives for carbon capture, utilization, and storage, but we don't have a price on carbon. It's a weird thing, and but in some respects it establishes a value for carbon, and I think it's a good first step.
Steve, you've been in touch with the Trump administration some.
Yeah.
Do you support a price on carbon?
So if you want to reduce emissions, and that's what we're talking about, you need, certainly a price on carbon is one tool.
Do you think it's important to reduce emissions?
That's a whole other discussion, all right? And we
is.
can get into the certainties and uncertainties of climate science.
We can discuss that
and
maybe
the values, but not
later.
for this panel. If you want to reduce emissions to the level that's required to stabilize human influences, you have two tools. One is you can put a price on carbon. I like a tax, and the price has got to be...
You said you do like a tax?
I do like a tax. It's got to be significant enough, it's got to be predictable enough, and it's got to be universal. And we better do something sensible with the money, the revenue stream. It's significant. The other alternative is standards.
I think I just gonna pick. What does it matter to do the revenue stream? We want to correct the externality, and then of course we don't want to waste money, but we never want to waste money.
I can think of wacky things that Congress.
I know, but you can also think of that.
$200 billion.
But that's orthogonal to.
Or good things.
Unrelated.
Good things.
No, it's unrelated
I'd
to
like to
carbon
be sure
Give it
that
back.
they want to do good things. The second tool is standards, and whether it's RFS or CAFE or
That's another way, an
RPS,
alternative
that's
way.
another way of driving emissions down.
I think
So
mandates are far less efficient than
you consider the
a
RFS
tax. Yeah.
abandoned. So Steve, just to make sure I understand,
Yeah.
you do support a carbon tax,
If you want to drive emissions down,
but
yes.
and you're not willing to answer the if part.
We'll have that discussion later.
Okay, that sounds good. Dan?
Yeah, I agree with the carbon tax. It would stimulate lots of innovation. But I think what Steve said is really important is predictability. Because for these large companies, you can't go from administration to administration and then have the whole ball game keep changing. So I don't care what it is, but they just say it, and then it's got to exist, say, for 10 years so that they can manage against it.
30 years.
Well,
Maybe even 30 years, yeah. But it's got to be a longer term number that is pervasive and goes beyond administrations.
Well, I definitely think we are changing the ball game. I think we went from one sport to another sport. I don't know what sport we're doing now, but it's not what it was for the last 8 years. Well, this was a great conversation up here and great questions from the audience. I want to say thank you to the panelists, and there's a break now, and then the next panel is at 11 o'clock.